right? We now have welcome to part 2. We now have Mr. Yusuf, that is a personal income tax. Mr. Yusuf is 38 years old, a quantity surveyor at Arrow Quantity Surveyors. He earns a gross salary. Of 45,000 rand. And then he contributes 7.5% of his salary towards his pension fund, and then he pays 3,500 for medical aid. Remember, he pays 3,200 per month for medical aid. And what we said is that this amount of money that he pays to medical aid does not have any effect to the medical tax credit. That tax credit, it is now going to affect the tax payable of Mr. Yusuf, right? Okay, so now when we continue with the statement, we find out that this Mr. Yusuf, which covers him and 3 dependent. Okay, so now we're given an annexure A, and then the first question, first 2 marks, write down the abbreviation of SARS. What does SARS stand for? So SARS, it stands for number 1, that is South African Revenue Service. That is South African Revenue Service. All right. So now, number 2, calculate Mr. Yusuf's annual taxable income. So annual taxable income of Mr. Yusuf, annual taxable income will be equal to Mr. Yusuf gets 45,000 rand every month, and he contributes 7.5% towards a pension fund. So now we're going to say 45,000 rand, and then now we subtract. What are we going to subtract? We're going to subtract 45,000 rand, that is multiplied by 7.5. So we didn't change anything, because now in this case we are looking for what? We're looking for 7.5% of 45,000. Okay, let's take a look. So we have 45,000 multiplied by 7.5. All right, multiply by 7.5%. Then we're going to say 7.5%. That will give us an amount of, we now have 45,000, which is the amount of money that he get, and he contributes 3,375 to his pension fund. And then now we're going to have 45,000 subtract the answer. Then it means this person is getting 41,625 monthly. So to get his annual taxable income, then we're going to multiply the answer by 12. We're going to multiply it by 12. Then this is what we call the annual taxable income, multiply by 12. So annually is going to be charged 499,500. That is the amount of money that he is going to be charged tax based on. Okay, so now determine his medical tax credit. So medical tax credit, it is him and 3 dependent. Okay, so it is a taxpayer. It is a taxpayer, Mr. Yusuf, and one dependent, that is 700, and then that it will be Mr. Yusuf plus 1. So now we left with how many dependent? We're left with 2. Then here we have 1 plus 1, which is 2. Altogether they are 4. So now to calculate number 3, to calculate his medical tax credit, we're going to have, it is him and one dependent, that is 728, plus, now we're left with 2, that will be 246, plus 246 again, 246 rand again, that is rand, talking about money, plus 246, that will be 1,220. That will be 1,200, that will be 220. That is the monthly tax credit. So the annual one, that will be 1,200 multiplied by 12, and then that will be times 12. Then his annual tax credit, annual medical, put medical there, that is medical tax credit, that will be 14,640, right? Okay, so now hence, based on what you got above, now calculate the annual taxable income of Mr. Yusuf. Okay, we now have his taxable income, the amount of money that they're going to charge him tax based on, that is subject to tax, and then we have annual medical tax credit, and then we also need to get the rebate. Let's go to number 4. Okay, now the rebate, he is younger than, he's in primary rebates, that will be 17,235. That is 17,235. So now to get his annual income tax, we're going to say annual income tax. We're going to now apply the bracket. Check in which bracket does 499 work, in which bracket. Let's go highlight it. 499, it is in bracket C. So now after getting the bracket, we're going to have 77,000 going to have 77,362 plus 31% of his taxable income, that will be 499,500, subtract, and then above 370,500, then you'll have 370,500. Okay, that will be equal to, now we're going to have 77,362 plus 31% into 499,500 subtract 370,500. That will be 129,123, and then that will be equal to, let's check the 31% of 129 multiply by 31%, and then that is 39,000. Then we have 77,362 plus 39,990. This amount of money, and then that will be 77,362. Then that will be 117,352. That is the annual income tax. So now we need to subtract the rebates, and we also need to subtract the medical aid. So the tax will be 117,352 subtract 14,640 minus 17,235, and then we need to get the tax which he must pay. Okay, 117,352 subtract 17,235 subtract, and then we will have 14,640, and then that is 85, 477, 45. So this is the annual income tax that he had to pay for 2024-2025 based on the amount of money he is getting. That is 85